Yeah, so panelists, feel free to come to the stage. We're looking forward to the last session now, and I want to do it a bit differently to the panel discussions that we have seen during the day. I will introduce all of my speakers and ask them one or two questions, and then afterwards we're going to wrap up the closed round here and include all of you for a longer time, because I think there's so many good and interesting people here in the conference room that should also be included in the discussion, right? So we have very interesting speakers here. So listen to what they say and then ask your questions and contribute to the discussion. I'm hoping that this will only take like 15 minutes or so in the closed round, and then we have plenty of time to discuss together, okay? So prepare your questions and be ready whenever we open up the stage. Let's start maybe with John, with you. You have an interesting career, 25 years at Bank of Canada, looking at more scientific approaches for liquidity management, foreign exchange, financial risk. Then you moved to the IMF, 16 years there almost, focusing on global financial stability risk, fintech and CBDCs, a lot of focus, and now you are in various consulting roles. And focusing on digital money. So at Soda, Satoshi Capital Advisor, Whisper Cash. Very interesting to have you here. And what I also want to mention is your FinTech Daily Digest. It's a daily newsletter, which is quite interesting. If you don't know it yet, you should subscribe to it. It's a good source of information on everything related to digital money. And I mean, as your role, or in your role as advisor and researcher, where do you currently see most traction in digital money? We've heard a lot about CBDCs, a lot about stablecoins, a lot about tokenized deposits. Where do you see the biggest traction? Is it in the public side? Is it in the private side? Where do you think that we will end up end of 2024 or next year at the next DEC conference? What will happen this year?
Well, that's a big topic, and the answer is quite broad. But I think CBDC has a role to play in the future, but I think the way I think about CBDC has become more nuanced over the years. When I started out looking at CBDC, we were focused on what we call the Death Star CBDC. That's an expression that was coined by Peter Fakus from the Central Bank of Hungary, and this is what I would call a top-down CBDC. You're designing a CBDC for all citizens, for all purposes, and it's mega, right? It's really big. And what we've seen actually in practice is that most of these have been rather underwhelming in their reception. So I think there's going to be a kind of a nuanced turn of direction of CBDC to what I would call more of a bottom-up approach, little mini CBDCs that solve very specific problems. And I'm looking to central banks like Brazil, Australia, Hong Kong Monetary Authority, and the Central Bank of Hungary, who have done some of these experiments. In SOTA, we call it to the test and deploy CBDC. So you start really small, and you get rapid success because you're developing a CBDC for very specific use cases. And we heard a lot of that kind of language in the last session too. You got to focus on users, and so I think that you'll see a turn of direction for CBDCs to more of these smaller scale things. Broadly speaking, too, when I go to conferences, I hear a lot about fast payment systems, and I think, again, we're on the public sector side here, so I think fast payment systems are something that seem to be catching on, and we've seen even in the BI's Innovation Hub doing very interesting cross-border experiments. We all talk about Enbridge because CBDCs are the topic du jour, but we've seen also, I think it's Project Dunbar, where they've linked up fast payment systems very successfully to solve some cross-border payment problems. On the private side, I think stablecoins could get some traction, but I think one of the issues with stablecoins is, and people harp on this all the time, we need to allow stablecoin issuers to have accounts at central banks, because we've seen, like with the SVP debacle, the problem is that as they scale up, they've got to find a place to invest their funds. They've got to invest it in highly liquid, high-quality assets. There's just not enough of them, and so they run to the commercial banks, and then next thing you know, they've got this concentration risk problem. That's all solved if you allowed fintechs to offer stablecoins that are backed by central bank deposits, which are the ultimate in quality and liquidity. So I think I'm hoping that we see some central banks opening up the accounts. The Fed, for instance, has rejected repeatedly any attempts, but the Bank of England seems to be more flexible, and they offer these omnibus accounts to fintechs. So that's kind of where I think small-scale CBDC, test and deploy, and I think stablecoins backed by central bank money. That's probably more of a hopeful thing than I'm not telling you that next year I'm going to say, yeah, we're there. You know, the Fed and the ECB have opened up their accounts to fintechs for stablecoins.
So lots to digest, lots to think about for your questions. Switching over to you, Joachim. Joachim Schwerin, you're a principal economist at the European Commission. And now this is really that I have to read that. It's the unit responsible for the digital transformation of industry with the Directorate General, Internal Market, Industry, Entrepreneurship and SMEs, which is DG GROW. So long definition here. And you're responsible for the development of the policy approach for the token economy, looking at applications in the industry and SME, and we've heard some industry representatives today as well. And you're focusing now on DAOs and Web3 as well. You've been involved also in the MiCA development in the past and SME access to digital finance, so really focusing also on this SME role. And my question to you is, and I mean, we've now focused so much on money here, but you see in general a lot of application of new technology where new forms of money would be required. So focusing on DLT, for example, in the European industry. And can you let us know about the most interesting projects you've seen as your role, maybe being in touch with the industry as well?
Yes, that's a big question, and probably my answer will be even bigger. We see actually a lot of use cases in the real economy being driven by industry, but also by decentralized entities, by Web3 developers, by many players in the real economy. And I think from my perspective, we need to broaden the discussion when we talk about use cases and going from money and finance to value. Because what we try to achieve and what my guiding principle is of course on the one hand side, and we've heard that today, we have a lot of innovation based on existing infrastructure and use cases. It's more learning experience, as is the discussion on the digital euro. I will not repeat discussions today that we haven't yet seen a convincing use case, regardless of where we are looking. But at the same time, it's a political project. It's a project where also I think the learning dimension is in the foreground because everyone is now working on CBDCs. So I think it's very legitimate for public authorities to also do that. But we see in practice that progress is much smaller than I think most people have seen. There's a lot of discussion we had on stablecoins. I think the elephant in the room is what will happen once the Americans will regulate stablecoins, because 98% of stablecoins are dollar denominated, and it's a priority for them from an industry and competitiveness perspective. And I'm not sure that that will then foster our thinking of European independence, but also what the rest of the world outside America wants. So I have a big question mark on the digital euro. I have a big question mark on stablecoins. I think more in the future of tokenized assets in any form, but generally speaking, what we are fostering with our projects, and I will tell you two in a second, is that we look more at core principles, which for us is what drives actually the DLT space. That is decentralization, that is open source, and that is really creating innovation bottom up. And that also, I think, is very important from a cybersecurity dimension, if not from the privacy and data protection dimension that we always see. Because one takeaway of today is how slow these processes are and that it all needs time. On the other hand side, we have significant risks, and I mention only one, that is the question that comes from quantum computing. Now, yesterday I was at the European Parliament in Strasbourg. We all know that the question whether quantum computing will ever break through to be able to break open encryption is an open one, and that could be long in the future. But already now, there are systems in place, there is standardization on its way to address those things, because we do have quantum-proof encryption mechanisms, but they are mostly in the decentralized domain. And that is something that I need to stress here when we talk about the real economy applications, but also finance. The more decentralized I am, the better I am in terms of driving innovation and also of controlling risk. The more centralized I get, the bigger problems I have. That is a result from the financial crisis and the aftermath, but many other things, which is why I do not necessarily personally understand why I would need to have a bigger role for central banks and central entities when I'm talking about money. I think it's useful to have that as a learning curve, but the future, in my opinion, is the true nature of what a decentralized digital infrastructure is, and that is the transfer of value. And we are doing that, for example, in one project that you will probably know. We are working on this for 5 years. We have it operational, our anti-counterfeiting blockchain infrastructure, which we use to detect fake products. That is something where once something is produced, we create a document, we create a digital twin, and both the physical and the digital product go on their journey. The information exchange is through NFTs. We have an open source infrastructure where on a need-to-know basis, certain authorities can onboard to check whether something is the correct product or not. The same thing we now apply to verification of documents in every way. When you go abroad, when you, for example, need to have a social security certificate, when you need to have a birth certificate, when you have a driving license, etc., the basic principles that we are applying is not starting from the data points that gets us in a mess, but it is from a document, and the document remains in the private domain, but the only thing that an authority should do is it should have a means to identify the correctness, the integrity of the document as such. Think of the COVID passport. No one has to know what your personal data is, but when you cross the frontier, it is green or it is red. And that is for me the same principle that basically with this type of infrastructure, you can ensure the integrity, but also transfer the value of everything. And that can be a physical product, that can be an idea or an intellectual property right, but that can also be finance. Because in my opinion, it's not really about money. That is a positive concept, but we all know that money has its flaws in terms of who is backing it up and that there's a trust level, but it's the transfer of value. And what industry wants, in my opinion, is basically very concrete use cases where they can define for themselves what value is, with whom they would like to transact value, and then be in an operational way, fractionize it, settle it, however you would like to do that, but that can be done in very different ways. For that, you need a basic layer of a public infrastructure, but one that keeps the flexibility for these innovation processes. And on that, we are progressing very rapidly. We have a massive increase of basically use cases in the future when you go abroad. We intend to build a lot of systems on this basis, but again, it's open source and it's not something where we need more public entities, more centralization to work on that.
Lots to digest, very interesting. I wasn't aware of everything that is happening there. Very good talking about centralization and decentralization. Now coming back to a rather centralized player, MasterCard. Christian Rau, you're a Senior Vice President, Crypto and FinTech Enablement for MasterCard in Europe. You headed the Central Bank European product team before becoming General Manager for MasterCard in Austria. And now, focusing on everything related to crypto and FinTech here in Germany and in Europe. So my question would be, what do you see, or which role do you see for MasterCard as a big centralized player in the traditional finance area that we currently see with regards to the new developments of the digital euro, stablecoins? You know, I know you have a multi-token network project as well running. So where do you see MasterCard coming into play in this new world of
thanks for the opportunity. And I think one of the pleasures of being so late in the day is that I actually only took notes and can recite from other smart people speaking before me. First, I would almost question our perception being a very centralized player. We have 3 billion cards out there with 23,000 financial institutions. So it's not that we issue cards, right? It's banks. Essentially, we are providing a platform that provides global interoperability to facilitate safe, simple, secure payments. And I think we do that at scale, and I think all of the discussion that is happening in the context of retail CBDCs, from my perspective, and I have a very strong European bias, should be led in that, from my perspective, there's no market failure, right? I think as a European, you never had more choice, and we heard about 50 apps on a phone. You never had more choice to make payments than you have today, whether that's Klarna and a handful of other buy now, pay later, whether it's cards in 4-party scheme, 3-party scheme, debit, credit, instant ACH, API, you know, wherever you are, there's so much choice, and I think that's a sign for a very healthy market. If you also look at the cost, if some of the acquirers make it open, right, you can easily look up what you pay with SumUp or something if you're a small merchant. And typically, I would think that these costs are actually lower than the total cost of service for cash, right? So that is something that I wanted to say at the beginning, because from my perspective, the retail CBDC should not be a treatment to an ailment in terms of a failing market. That's my perspective, right? And then again, taking up some thoughts that we heard today is partnerships. I think as a global institution, we partner wherever we are, right? We can't do it alone without going into the intricacies. We typically co-batch our cards with domestic schemes, right? Whether that's Gyro or Carte Bancaire or whatever, to provide that theme of global interoperability that we heard today. So we are very used to work in this. It's not a public-private partnership in this sense, but we're very close to partnering with different institutions. Then I think meaningful innovation was also a theme. If I look back when I started with MasterCard 12 years ago, things were moving really slowly in the industry, right? Nobody actually wanted to work in payment because you still had these rich things and German taxis, right? And look where we are now in the Netherlands. People use Apple Pay more than they use cash. And 80% of the market plus is already cashless, right? So I think the innovation, the user experience, all of these things are there, and I would call it relevant innovation. And then touching on regulation, I think we see that regulation that aims to provide a level playing field, fair competition is absolutely welcome, especially now that I transitioned into the crypto part of the business, coming from our traditional business. I see that this is super important, because all the things that we as a company, and I think 99% of the people in the industry also will say, KYC, AML, stability of value, consumer protection, all of these things quite likely are kind of underdeveloped muscles in part of the industry, and we need to bring this there. So in a nutshell, to answer your question, I think I feel very comfortable where we are at this point, sitting somewhere in a good position between, let's call it the old world, the fiat world, the banking world, but being very open to have technical innovation on our network as long as it does not comprise stability of value, AML, KYC, all these regulatory standards. That's pretty much our position, and there's too much really to speak about what we really do, and I understand it's not a sales conference, but since you mentioned MTN, I can quickly speak to that if that's of interest. Sure. So I think it was also what you were saying, Joachim, we have a strong conviction that more and more real economic use cases are tokenized, whether that's trade finance, supply chain finance, real estate transactions. These things move onto blockchain. And our conviction is that industry players that want to use these rails should also be able to use payment directly adjacent to this system. So that's why we are essentially looking at transposing our current franchise, which comprises technology, partners, and a rules and regulation network for dispute resolution and so on and so forth. Put this essentially on a blockchain and then facilitating payments in the form of tokenized bank deposits, CBDCs, and stablecoin, obviously subject to when they're available and where, and basically provide kind of a walled garden where you can interact safely in the blockchain and still keep banks in the game through tokenized bank deposits, obviously be open to new players in the form of stablecoins, obviously open to CBDCs. So that's kind of the vision of the multi-token network, and again, it's transposing our network idea with a tint towards the B2B flows onto the blockchain.
So a shared platform for different types of liabilities that can interact with each other, whereby not disaggregating any player or disintermediating any player, but still keeping up the two-tiered monetary system. I mean, this is a perfect bridge, basically, to our last guest here, which is Bruno Batavia. And you are, or you have been you are a principal and director at an emerging tech venture capital firm, Valor Capital Group. It does cross-border venture capital, between the US, Latin America, and in general global technology markets, but I think Latin America is especially your focus. You worked 13 years at the Brazilian Central Bank, financial sector specialist with a focus on payments, and now recently also digital money and CBDC. Well, not so recently, because you worked on this project called DREX, and I used to, or I did raise this point a couple of hours ago already, because I found it quite interesting. And this is the perfect bridge. DREX is a project basically leveraging existing players, putting those liabilities on a shared platform. And yeah, I would be interested in a pitch basically of the project, what you did there and what the overall idea is, because I think it is quite interesting. Yeah, there's not too much to read about it if you don't speak Portuguese, so it's hard to find information. So we're a pleasure also to have you here to explain what you guys are doing in Brazil there.
Yeah, well, thank you so much, Manuel. It's a pleasure to be here. Thank you for the invitation. I was fortunate enough to spend almost 13 years at the central bank. While, like, during this period, the central bank pushed a lot of innovation. I think it started around 2013, the last 10 years. Not only from the regulatory standpoint, like opening up the markets for payment institutions, but also providing digital infrastructure as like a public good. So, of course, some of the initiatives there, some of you may already have heard, such as PIX, which is the instant payment system in Brazil, that in less than 3 years onboarded more than 150 million Brazilians. Included also more than 40 million Brazilians that didn't have a digital bank account, and it's free, it's 24/7, and this was, of course, one of the flagship projects from the central bank. Also, while there, the central bank pushed the Open Finance initiative, a broader open banking, including also insurance, pensions, capital markets in general. And most recently, at least not that recently, I think I was in the very beginning of the project since 2016, when we started researching and interacting with other central banks and international organizations. I think the project, the DREX initiative that back then was not even CBDC because we didn't have this acronym. We called DFC, Digital Fiat Currency. And then it evolved a lot, and we've been seeing a lot of central banks like talking about it and pushing like such projects. But DREX, I think it's a little bit different, as Brazil already have like a pretty functional instant payment system, PIX. It already addressed quite well like a big pain that's like domestic retail payments, digital payments. And with the DREX, I think the thought was like, what's next? Should we move further? Should we have provided a new infrastructure, a new platform to allow like broader financial service, maybe as a next step of financial inclusion as well? Because payments in the reality it's the gateway. It's the basic kind of service that every citizen should have, right? But when I think about like financial inclusion, even like beyond people, but like SMEs, access to credit, capital markets, structured projects, it's very tough, not only in Brazil, but I think globally. And the Central Bank of Brazil is trying, with DREX, trying to leverage a new platform that's blockchain-based. And it's also EVM compatible, which is compatible with Ethereum virtual machines. In other words, it can leverage a lot of the innovation that we've been seeing in decentralized finance and public blockchains, and also automate a lot of the flows, leveraging smart contracts, of course, create innovation with composability, and being like a new ecosystem for the broader financial market and even capital markets to build on top of it. Because if you look at instant payment systems, we've been seeing it's not only like a local thing in Brazil, but also globally. Some of the ecosystems are very, very fragmented. We have like local solutions, maybe infrastructures for instant payments that are provided by the private sector, maybe more like smaller or bigger institutions trying to push their own digital wallets. And sometimes they don't interoperate, they don't talk with each other. So I think one thing that was very fortunate with PIX is that it not only had this kind of digital and common backbone, but also have like a common rule book, common standards, interoperability. And with the DREX, I think it's just the same. It's like, as we see with public blockchains, the big layer ones, Ethereums, layer twos, you name it. People are building ecosystems and building financial primitives and services with automation, and also thinking about different ways to provide liquidity. So the idea here is also to build a new ecosystem and to move from there. And the central bank, I think, and central banks in general have the role to provide this basic digital infrastructures, these digital public goods. But of course, the private sector is the one that should build on top of it with this new tooling. And the central bank role is very important for from a market coordination standpoint, because sometimes it's very difficult to get everyone together and agree on standards and really fast track like initiatives such as this. So I think the central banks are in a good position, but there's a limit. So after the deployment of infrastructure and supervision of infrastructure, and of course with a lot of interaction with the market participants, a lot of the innovation will come from the private sector. So we're very keen. I of course can talk a little bit more, but I'll stop here, and then if anyone has questions, and after we move in the debate, we can dive deeper.
Yeah, I want to open up the discussion to the room as well. I think looking at the time, this is definitely needed. So if you have any question, raise your hand, and then somebody with a microphone will hand that microphone to you. I mean, to summarize all the 4 different points, I think what is quite interesting is it is needed to go into the real economy for real economic use cases. I think we have heard that retail CBDC might not be the one and only choice to do that, right? And I think this is also important to mention, because DREX doesn't include a retail CBDC, right? It includes wholesale CBDC and tokenized deposits, which are then settled in wholesale CBDC. Leveraging existing money infrastructures, money market setups with commercial banks and central banks, and then building a platform where real economic use cases that we also heard from Europe can be built on top, right? So this is the development that we are seeing to get the digital money into the real economy. Sure, yeah.
Thank you very much for the panel. I have one question for maybe more for Bruno. In a country like Brazil with PIX especially, would you see a value to have a CBDC, or do you consider like there is no need for a retail CBDC? For a retail CBDC, considering what they've managed to achieve already?
No, sure. It's like a very good question. I think that one good thing that's at least in Brazil is that we have this kind of service that's addressing quite well payments, PIX, right? And we can have a more clear vision of what's would be like a new infrastructure, what would be like the possibilities and the use cases, and how the project should move, since we have this address already digital retail payments, as you mentioned. And I think that within PIX, a lot of use cases are well covered, like account-to-account payments, P2P payments, POS payments, you name it, any kind of payment flows, right? Even payment initiation, like a third party can move money from a bank A to bank B, like a fintech if authorized. So, but on this new infrastructure that will be blockchain-based, it will be able to leverage new capabilities, right? So with smart contracts, we have the opportunity to do a lot of automation, right, with programmability, and even create new service aggregating, service from third parties with composability. So on the automation part, for instance, in this kind of payment initiation schemes that we have like abroad, not only in Brazil, you can basically move money, right? With maybe a little bit on, like moving a little bit further on the next level and leveraging smart contracts, you can even create some complex flows. For instance, maybe if you initiate a payment, then you deposit into a smart contract that will access any kind of investment, and depending on the conditions, like market conditions, it will increase the investment, or divest, and then change and liquidate the position and send a payment to another entity. So you can really create complex flows with tokenization smart contracts that might be a little bit different in like this more traditional instant payment rails. Of course, even PIX is evolving. And we have the central bank has an evolutionary roadmap with new features coming in October, for example. But the programmability is limited. It gets to a point, right? But after some point, we have a lot more flexibility with smart contracts and blockchain technology.
Hello, my name is Rupert Kassenbrock. I'm a consultant at LPA. And I have a question for Dr. Schwerin. First off, do you expect an American CBDC in the near future? And secondly, you are mentioning sort of a threat by stablecoins for, I would say, for Europe. And I just want to know, what do you exactly mean by that?
There's certainly an interest in CBDCs in Europe, but we will have to see what will materialize. I speak a lot with CBDC issuers and especially American ones that take an interest in coming to Europe. At the moment, in my opinion, that is more, and I think we discussed it before also in previous events, sort of hedging, because they're all waiting for the result of the American election and then see with whom they have to deal. I think there are very clear expectations with whom they will deal, but not really who will then be the new people in office. So we will see that. So they all take an active interest now that we have MiCA, but my opinion is, and I've stated this many times before, we have solved 10% by bringing out the text of MiCA, and 90% will be now with the technical standards, with the implementation at the national level and what will happen. That at the moment is a very difficult exercise. So the door is a little bit open, but who will go through these doors, we'll see. We are in a better position with MiCA than without MiCA, but I think this is really a very global consideration. Also, if you look at the number of requirements in MiCA that came in the political process of where you hold your reserves, what types of reserves with which institutions, etc. So it's not a very clear-cut case that the Americans will come very much, but we see an interest, especially of providers of, let's say, more innovative things where the reserves are not necessarily fiat money, but perhaps, let's say, gold, diamonds, commodities, etc. There is quite a considerable demand of developing use cases and coming to Europe. On the second question, I would not say that I spoke, at least I hope I did not, in terms of a threat. The only thing that I'm basically saying is that we have now a very clear and accelerated decrease in the use of dollar as a reserve currency globally. And in my opinion, the role of the dollar as a reserve currency comes to an end. But the US are discovering, of course, that they hold a very strong position in terms of stablecoins and the reserve currency for stablecoins. And when I speak to the same companies that I just mentioned, they now, of course, realize that whoever will be in government will probably come up with a sort of regulation that in a way will be hopefully liberal, but realizing that this is a sort of American asset that the world will be happy with and they will regulate it according to their terms. I have no opposition to that whatsoever, because I think you need not criticize or prohibit things, but just try to offer other things or be better. The only thing that I'm saying is that I'm neither convinced by any state of either a CBDC in Europe in the next 5 years or the stablecoin development in Europe, because there are so many practical obstacles. Whereas I see that already now, a lot of players are developing very good use cases based on a very strong startup network that we have in Europe, especially on blockchain and Web3, for more tokenized solutions that are of direct application in concrete business environments. And that is where I see much stronger the future than in any of the things that we are discussing here. But that is in no way in terms of a negative assessment. I think all of that is useful. To just add, the previous panel talked about cash. I'm a very strong believer in cash. So I think there's a role for that as well. And at the end of the day, it will be up to you. What is your specific need in your context? And I think a public authority should create choice, but not limit choice. And at the end of the day, therefore, we will have many things around. But certainly we are in a phase where we have no clue whatsoever what really the convincing use case will be in 10 years. We have now Bitcoin for less than or for about 15 years. See where we have advanced. Now we have the bits and pieces everywhere. I think the big convincing case that will get mass adoption is still out there. We don't know what it is, but I don't think it will be anything of what we're discussing today.
I was just going to address the first question. I live in the US, so I'm quite familiar with the landscape there for potential CBDC. And we in policy circles, we always say that if you only have to make a change, like big changes in policy, if there's a market failure. There's absolutely no market failure in the digital payment space in the US. I mean, I go into a store or whatever, I've got a dozen or so different payment options. I think there's a niche case. We say bank in the unbanked, because you might be able to create a CBDC for those people that they can't open a bank account. They don't have enough of a balance, because if you don't have a high enough balance, the banks kill you with fees. So maybe there's a niche case there, but I suspect that even there, many of the unbanked in the US are unbanked because they don't trust any institutions, especially not the government. So if you roll out a CBDC open that, if we build it, they will come. They will not come, and it'll be an embarrassing failure.
Yeah, there was one more question over there, yeah?
Thank you. Hi, I'm from Visa, but I'll ask my question in a personal capacity, if that's okay. This was a follow-up to Joachim, actually, around, if you like, the evolutions in decentralization, potentially, and maybe where Europe's politically driven retail CBDC project with the ECB is currently at the moment. Are you confident, given the amount of investment we've heard about and the amount of open questions, that maybe we could pivot, or the ECB's digital euro project could pivot sufficiently to meet some of those changes in the market, given that it seems to solve political problems that maybe exist today?
If I have learned one thing in my professional life, is that very often it's not about swimming, but it is about not drowning. Which means that basically whenever you have a next step, you survive the next step and you are still in business. And that is what we do with the digital euro. What the Commission has done last year is it has created a draft proposal for a legal basis which keeps the door completely open, for example, to programmable payments. And I continue to call them programmable payments, because conditional payments are when I go to the bakery and when I give €2 for a leaf of bread, that's a conditional payment. We are talking about programmable payments. So that is foreseen. It is for the political discussion. The ECB says it very clearly that they wait for a political mandate, but until then, and I think they are well advised, they continue with the exploration and with seeking partnerships on the market for that. We will see how that develops. We'll get a new European Parliament, we'll get a new European Commission, we'll get a new work program. Things will happen in the world. A lot of things have happened in the last 2 years. More things will happen. So I think from an evolutionary perspective, the best thing that you can do is just stubbornly drive your things forward. There will be a need for certain things, and who knows what the basis of that discussion will be at the end of the day. I think those that have driven the project most aggressively forward, with the exception of small but respectable countries, have been the Chinese, who have now realized in the hard way how difficult it is actually, even with all their power, to create such a thing, and that people don't want it. So if we take more time and we get a structured approach, we might be better on this. I do not know. So there's nothing wrong with small steps, with messing around a little bit, with looking left or right. At the end of the day, the only thing that we need to be very careful about, and that is what I'm really trying to push through, is we must not only not abort what happens in the private domain and in industry, but we must really ensure the interfaces, the interoperability, the skills development, the ecosystem building around that, so that you're flexibly enough if the environment changes. And that is, of course, not textbook neoclassical theory, that is more evolutionary theory, but the world out there is really about not drowning.
Thank you. That was interesting. I mean, we would maybe have one last question, but a short one and short answer over there. And then I think we'll wrap things up, and then Jonas will already end the good conference day.
Jens Seidel, Currency Research. We heard a lot about how costly this is, how skeptical people can be about CBDCs, but there's also been studies that suggest that a successfully implemented CBDC could increase the GDP by 2 to 3%. Is that credible, or does the panel think that's bullshit?
I think the first thing would be to define what's a successful CBDC. I once heard a central banker say a successful CBDC is there but not used. So the question is really what constitutes success? And back to what we heard, whether it's China, whether it's Nigeria, the e-Naira, I would say if you look at it in terms of volume of the consumer to merchant, that's sort of the bias I have. Volume, I would say none are there to really validate that thesis, because I think the condition of success would not have been met. But I believe that if you re-articulate that question a bit broader and say, is an efficient, inclusive, secure, value-adding digital payment landscape adding real value to an economy? I think absolutely. And if we look, and again, I don't want to sing our own song, but if you look at what payment cards in all their different shapes and form have done for removing friction, especially in the context of Euro and SEPA, for the economy, I think you can definitely see a boost. And I guess in theory that could happen, but it's too early to say from my point of view.
There is some research being done out of the IMF that talks about the higher velocity of digital money. And that's not just CBDC, but digital currencies in general. So that could be the channel through which you might get some bang for your buck. I also read recently a study that showed that tap to pay has been responsible for a lot of growth in spending too. So I think there might be some credibility to that idea.
And just one last comment to complement, some studies that are stating this, also they're thinking about CBDCs that are like cash-like substitutes, right? So to really operate the whole management and the life cycle of physical cash is very expensive, not only for the central bank, but also the banking industry, CIT companies. So there's also an opportunity if it's a real cash-like product. So not sure if it's this angle that you comment, but there are opportunities for improvement and increasing the GDP depending on the model.
Okay, good. Then I think we are wrapping up. Thanks all for joining that conference and asking the good questions. Thanks to the panelists. And handing over to Jonas for the last words. Thank you.